Alright everyone, here we are with another video with Invest for tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. All I ask for in return is for you guys to smash that like button, and if it's your first time here coming across the channel, welcome. Don't forget to hit that subscribe button, click on that notification bell so you don't miss a single video. And we do chart analysis here with 42 Vision, and so you can be up to date and not miss a single video. So here we are with the SPY, and we're going to talk about some key data points and resistance and support levels here, and what 42 Vision is showing, as well as different articles and headlines that have came out, and how we've ended up breaking through a consolidation that the SPY was in, and where we are now, and what this could mean moving forward with the Fed, the CPI data, because yesterday was a big day with initial claims. Today it was actually consumer sentiment, CPI data, and the SPY went lower, right? And our SPY bot at 8:35 a.m. sent us out a bear indicator based off the 5-minute chart and up towards the bell. And even after the bell, the SPY continued to go lower, and put options went up 100% plus within an hour. And this is our new release that allows us to have an edge within the volatility of the markets to maximize on opportunities, whether stocks are going up or going down. And you can now gain access to it as well. The link is down below in the description to the 42 Vision indicator, getting connected to the SPY bot, the QQQ bot, our newly released Tesla bot, and we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets. And you can now join the members using these resources to maximize in either direction by receiving this clarity and edge over the charts. So we're going to break it all down in today's video. We have a lot of important data to share, and my thoughts, my perspective, and my opinion. As always, it's not financial advice. But before we break it all down, I want to share with you guys the home opportunity that our QQQ bot sent out over at the Discord this morning. So the home opportunity that was mentioned this morning turned out to be from our QQQ bot. The stocks I mentioned this morning gave realistic expectations of 3 to 5%, 5 to 10% plus. And if you want to receive this clarity and edge over the charts and know about these stocks early on in the pre-market, check out the link down below in the description to the Discord and getting connected to our 42 Vision indicator and our bots within the Discord as well. And you'll become part of a growing community of investors, all looking to learn and grow together. And we strive for opportunities like these every single day. So as you see here, our QQQ bot sent out a bear indicator since 8:35 a.m. And from that moment forward into the bell and after the bell, the put options went up 100% plus within an hour, guys. If you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts, check out the link down below in the description to the Discord. We look forward to having you join us, and let's jump into these charts. So here we are with the SPY, as I stated earlier in the video, pulling downwards, and as you see it, it is trying to level off, and it hit extreme weakness here based off 42 Vision. Every single time you hit white with red borders, that is extreme weakness, and then extreme strength is bright green, and then the transitions happen again back down, back up, as you see right there, and then back down, as you see right here, guys. And then on top of that, we have the bull and bear indicators to add an extra layer of confirmation to give us that edge and clarity, and you can now gain access to it as well. The link is down below in the description to the 42 Vision indicator, getting connected to the SPY bot, our QQQ bot, our newly released Tesla bot, and every other bot that we're going to add, you'll gain access to as well to receive the clarity and edge that you deserve. And the link is down below in the description. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together, maximizing in either direction by receiving this clarity and edge over the charts. So as you can see, the SPY here, every single time it would reverse back up from that white with red borders and take off with strength. It got a bull indicator. Then when it would pull back down, the full transition would follow a bear indicator, actual extra layer of confirmation, and again another bull indicator and another bear indicator that we've been under on the 30-minute chart for the last 3 days, guys. This has been a pretty strong bear indicator compared to the last bull indicator when we came from these levels back up. Isn't that interesting enough that things consolidated? And in the last several days, if you've been watching my videos, I was talking about how this is a pivotal area based off the chart, and the same area we took off from all the way up to that consolidation is the same area we left from to end back into that same level, guys. This is a pivotal point now in the bigger picture, and that's why we're going to look at it from bigger time frames as well, not just the 30-minute, because we've been following this and comparing this to previous crashes and what different articles are stating. So let's look quickly through the different articles, and as you see here popping up on the screen, the CPI data, right, and the core CPI and the consumer sentiment was not as great as expected, guys. That's something important to realize, and where we stand and what could that mean moving forward. Well, we have different articles coming out and stating these type of things, stating the market rally won't last and this summer will be rough, as the S&P 500 could go as low as 3,200. Okay, that's one of the lowest points I've heard. I've heard 3,400, 3,600, 3,800. That is pretty bearish, guys. And they're talking about the worst case scenario. So that is not their average or neutral, if not their worst case scenario. So something to keep in mind. Is it actually possible? Anything's possible right now in this type of volatile market. But something to keep in mind is that it's good to be aware of the worst and the best, right? To kind of have an idea of where others are thinking. Then you have here the S&P 500 is near key levels that could spur a big move in either direction. This had came out yesterday and a few days ago. We covered it in yesterday's video, and here we have it where we stood and where we stand. It was in a key area where it could either go in either direction, and here we are going lower. This is very important because we thought that this was the bottom and we're retesting it. And this is why this video is important, because we're going to talk about what will it take for it to stay away from the bottom and if it's going to retest it. Okay, because you have here 3,200, and yesterday's video the worst was 3,400, and then you have others being bearish anyways when things were higher. Why did the stock market go down? Well, it went down because of the fact that the inflation report for May was a 40 new year high. And it seemed like we already had hit 40-year highs when things started to slowly ease in April, but turns out inflation hasn't peaked. That's what actually turned everything around. As you see in this graph popping up here on the screen, which I shared with everyone in the Discord this morning, I put arrows where every single inflation number went up instead of stating neutral or down, and you can see the month over month going from 0.3 to higher levels, right? That was a big change in 1 month, and everyone thought inflation has peaked. It almost did. Hey, psych, I'm going back up. And oil prices is the highest ones. I circled those two there. Fuel, which everyone can know that without obviously a CPI data. You feel it at the pump. But here we are with another one stating the S&P 500 slumps as surprise jump in inflation is to keep Fed on the rate hike trail. Everyone with the April numbers, okay, was thinking that inflation had peaked, right? Because things started to go down, and they thought that because of that, the Fed was going to put the brakes on Fed hikes. Now, everyone's actually worried about the rate hikes. Is it going to be 0.5? Is it going to be 0.75? And now is September on the table to be the more dovish side of stopping around that area and slowing down, or the Federal Reserve leaning hawkish, which then makes things continuations of rate hikes? And we had both sides of the Fed split, where some said we're going to try to slow down towards September or the end of the year and pause, and others are like, we can't really see a pause happening. So if you've heard different Fed members speak, everyone's been on each side, and right now inflation is making things seem like we can't actually pause. We don't know yet. We need to see how the Federal Reserve is going to speak in the next two meetings, and especially the one coming up, and how they react. Are they going to be more aggressive? Are they going to set the tone for the future rate hikes? Are they going to continue to stay persistent? Because if they go ahead and stay persistent with, we're going to try to do 0.5 now, 0.5 in July, and we'll see if we pause in the future, and they kind of stay consistent with their plan, even though inflation seems to be running high, either they see something we don't, or they are trying their best to see if inflation can calm down on its own, and they're going to take that risk and then they'll be more aggressive if they have to. But if they stay consistent, that can create or spur up a big rally that no one would be expecting. So you don't want to stay too bearish in this market or too bullish, I like to say. But I am going to be continuing to move within the volatility by using 42 vision to maximize on these moves to the upside, the swings to the downside, upside, downside, by seeing the rips and the dips, and then extra layer of confirmation with bull and bear indicators. And as always, this is not financial advice. This is just my perspective and opinion alone, and you could become part of it as well and join a community of members that are all learning and growing together and maximizing within the volatility by receiving that clarity and edge 42 vision brings. As always, that link is down below in the description, and we look forward to having you join us if that's something that interests you and you want to take your investing journey to the next level to maximize, because volatility is not going anywhere. But back to it here with the SPY. The SPY right now on the 30-minute, a lot of volatility, but if you put the 1 day, we have been under a bear indicator since 444 on the SPY. We hit a dip area, it ripped back up, and things quickly shifted since yesterday from red with green borders to red with red borders, and this big bar here almost insinuating the continuation of a downside trend. Now we need to see how things bottom out here, and the support is 380. If that gets broken through, the next support level is down here at around 370s. Okay, that's the area I'm looking at, 370, 372, give or take. And then below that is all the way back here towards the 320s, and even in between that at the 350s. Okay, but right now we need to look at 380 and see if it bounces back up, because if it hits that area, we could possibly see a double bottom effect if it bounces back up. And in that double bottom effect, it will need to break above 417, 420 to be significant. And that's going to be interesting as well if some rally like that happens. Okay, super important. Now, if you put the 1 week though, which is what we've been using to compare to previous crashes and corrections, we have been under a bear indicator, and I've actually talked about it since the beginning of the year, and I shared it with everyone once this bear indicator popped up, and I've been actually updating you guys on this channel even when it came back up and things continued, how that bear indicator did not get canceled out even when this rally looked like it was strong enough to cancel out this bear indicator and continue, and it turned out to turn right back down. And here we are in this volatility here trying to fight, and things quickly shifted from white with red borders to red with green borders and back to red with red, pulling it back down, right? Almost retesting the lows. But when you zoom out, the 2018 crash here, you could see there's 2 white with red borders, and the 2020 crash, there is 3 white with red borders, and quickly right after they went back into red with green borders and got bull indicators both times, right? And they lasted for about a year and a half. Now things are a little bit different here. We hit white with red borders one time, it tried to reverse, and then things are coming right back down. So when you zoom out and we go all the way back, right, to 08, 07, 09, we had similar things happen, right? Bear indicator, and it lasted for several months and years. Hit the white with red borders, try to come back up, went back down, try to come back up, and then went back down for the big crash, right? And same thing with the dot-com bubble, right? Hit those white with red borders, came back up, white with red borders, came back up, and then it finally bottomed out after almost nearly 2 to 3 years. But that first bear indicator nearly dominated over the whole entire chart for over a year or 2 years. So when I compare it to the most recent crashes that we went through, which was 2018 and 2018, this is looking a lot more like 08, 2000. Is it guaranteed to last the same amount of time or act the same way or be such a big pullback? No, not at all. And is it possible? Anything is possible, like I always state, within the volatility. But these were pretty fast. They only lasted about a month or two before things turned back around. And the main thing I'm looking for is that bull indicator here on the 1 week as well as on the 1 day 442 vision to go ahead and signify possible strength, because every single little bull indicator that popped up here on the way down the last 6 months has been very short-lived and canceled out by another bear indicator pretty fast. What we want to see is on the 1 day a bull indicator, and on the 1 week as well. And this bear indicator has been dominating since January 24th, and even before that, once the 1 day pulled up on January 10th, and things started to go downwards. So in this volatility, we have a lot of different headlines. We have a lot of different perspectives out there. And the most important thing right now, when you zoom on in and look at the 30-minute, there's opportunities every single day. We broke out of this consolidation here, and now we need to watch the key levels that we're getting close to. The first one here, if you want to microscopically break this down, is down here at 386, and then the lows here of 380, guys. And then below that would be 370, 350. And to the upside, we need to see this actually break back above 394, especially 400, and then get towards 403, 410, hold itself up and see if it can build support, and hopefully the headlines are no longer this bearish and they start turning slightly bullish on the CPI data, on what the Federal Reserve actually states, and also the whole entire perspective that's out there right now in the whole entire market, guys. I look forward to seeing your thoughts down below in the comment section, how you feel about this, and if you want to receive clarity within the charts and join a community of investors that are maximizing within the volatility by receiving this clarity and edge, check out the link down below in the description to the Discord, our 42 vision indicator, and getting connected over to our bots.